There's no real way to predict the financial results of a company until the release. The good news is that historical data can help you make an informed decision, and that's where the expected move comes in. Expected move predicts a range where the stock is expected to trade on a certain date. This is calculated by taking 85% of at-the-money straddle premiums. It gives traders a probable high and low range of the stock's price, and that helps them make better trades as they don't have to gamble. Expected move can be found in all Barchart screeners or right off the stock's profile page right here on the left navigation bar. So wouldn't it be better if you could have a historical record of the stock's movement during these times? Well, good thing is Barchart also has the average earnings move, which, as it says in the name, gives you the average price movement in the last 4 earnings releases. By the way, you can check out earnings schedules on Barchart on the earnings and dividend page found right here. And then you can set alarms for specific companies by clicking on the 3 dots at the end. You can also see both the earnings estimates and the history by clicking the icon under the details and history column, as you can see right here. According to the data, Nvidia has moved by a little over 3% in its last financial releases, and it's expected to trade between $186 and $219, a range of approximately 8% on the expiration date closest to the November 19th financials release date. So how do you play this? Well, there's a few specific examples which I can get from the covered call screener, which you can access right here. Since the upper end of the expected trading range is $219, you might be interested in selling a $225 covered call on Nvidia if you own 100 shares of the stock. A covered call means selling a call option on stocks you already own, and the goal is for the stock to trade below your strike price at the contract's expiration so that it expires worthless and you keep the entire premium. For this trade, you at least have some measure of security since you set your strike price above the expected range. But what if you don't own Nvidia right now? What would you do? Well, you could instead sell a cash-secured put. A cash-secured put is an option strategy that involves selling a put option on an underlying asset. You'll earn a premium while setting aside enough capital to buy 100 shares per contract should you get assigned. If the stock trades above your strike price, you keep the premium and nothing else happens. But if the stock trades below your strike price at expiration, you'll be buying 100 shares at a discount relative to what it's currently trading at, and you got paid to do it.